want to bring into the discussion right now Alan Knuckman. And Alan, just want to make sure I get your title correct. You are the St. Paul Research Chief Market Strategist, correct?
Yes, sir. You got it. Thank you.
Good to have you here. So let's talk oil. We saw oil settle around, what, 61, or at least West Texas Intermediate, around $61.50 a barrel. That's lower than it had been trading last week, but still much better than what we've seen if you go back 6 months. Where are we headed with oil? And then let's get the Saudi Aramco news in.
Well, first, we need a little bit of backstory here. The market went from 0 to 60. It took us about 7 months, but that was a very healthy sign. And I looked at last year's action probably being a bigger bull catalyst, seeing oil break out. It was in a $35 to $45 range for 6 months. And when it broke out last fall, that was a bigger bullish boost than the stock market making that's complete comeback, in my opinion, because oil could be used as a barometer, and that showed us health was in the future. We've seen the market continue to move up. This 60 level is about the halfway point. If you look at the action for the last 5 years, between $40 and $80 has been most of the price action. So we still have potentially more upside, obviously, but I think we've come a long way. And if you really think about what happened last year when we went below zero, that was a capitulation point, and crude oil has never looked back.
Alan, Adam there mentioned the Saudi Aramco news. I just want to get your reaction to that, because we saw the pandemic took a significant impact on the business. Earnings were hit hard. They fell just around 44%. Was that largely in line with your expectations, or was that worse than what you were initially expecting?
Well, for me, I'm more of a commodities guy. So looking at that in individual stock or stock play based on what oil is doing, obviously we're on an uptrend, and I think further out quarters will be more profitable for everybody. But I think it's important that the energy sectors had this snap back, because for the longest time, it didn't participate in the rally until recently. It's still, a lot of these companies are significantly below where they were before this COVID crisis. So I have a way that I imagine that they'll find a way to come out of this better on the other side. Saudi Arabia and the cartels, they've got a way of figuring this out and figuring out how to press the right buttons to be as profitable as possible. So I would look for continued success, and I would not bet against Saudi Aramco.
Does their success, however, mean bad news for the local producers here in the United States who don't want to have a glut of oil on the market and drive prices lower?
Right, that's the balance, and you're seeing energy move in different directions and different segmentations here. If you look at electric, utilities are having this growth spurt from a value standpoint, but also because I guess there's going to be less miles driven with internal combustion engines in the future, and the electricity may be needed to power electric vehicles, and that's driving copper and so forth and so forth. So you're seeing shifts in just in the fundamentals of energy in the United States. I think we've come a long ways where we're able to produce and turn it on and turn it off as needed. But that's part of the game. You want to have it the three bears, not too hot, not too cold, and that's the main objective for energy producers here in the United States.
Alan, real quick, we also want to ask you about another big story playing out in the market. You're seeing it today, although tech is back in favor. We saw tech under significant amount of pressure as we see bond yields rise. What's your read on that? And do you think that the pullback that we have seen over the last couple of weeks, that is actually healthy here for the tech sector?
Absolutely healthy. Needed to be done. It's only been a little bit over a month since the all-time forever highs in tech. We've seen multiple, I think half a dozen 10% pullbacks in the last few years, and each and every time the Nasdaq's rallied back to make new all-time highs. Very healthy to have other sectors participate and take the lead for a while. But if you look at, like you've talked about, Apple and Amazon are at some critical support points and having some good value here. Looking at the NDX, which is a tech top 100, 13,000 is a critical level. It's a halfway point of this drop from the top, and we're back above it again. If you look, we keep pivoting around it. We need to close above 13,000 on a weekly basis. Now we're halfway back for that attack on the top one more time. That's happened every single time in history.
Alan Knuckman is not only the St. Paul Research Chief Market Strategist, but he's winner of this week's Damn, I Want That Background shot in my background.
There's ice. There's ice out there, though. It's not as nice as you think. There's ice in the water.